Hello and welcome to Indianomics. I'm Lata Venkatesh. This year, the fiscal position of the government is opposite to what we see every year. The governments, centre and states especially, have more money than they have been able to spend. Sample this: central government tax revenues were expected to grow by 1.8% for the full year. You know, tax plus non-tax revenues. They've actually grown by 17.6%, the gross tax revenues. And that's because of direct taxes. Direct taxes in the first half have grown by 23.5% versus a budgeted increase of 2.5%. However, on the flip side, non-tax revenues like divestment and dividend from public sector companies are expected to be much lower. However, the government may still have at least 1 trillion rupees more in terms of revenues than budgeted, according to a CNBC TV18 poll. On the flip side, expenses are also far higher than what the government budgeted. The government's food, fertilizer and LPG subsidies are expected to be higher by a total of at least 2 to 2.5 trillion rupees. Fertilizer subsidy alone could be double what was expected it to be. It was expected to be about 1 trillion. It's likely to be 2.1 trillion. And this is because of higher global chemical prices. Likewise, food subsidy could be higher by about 80,000 crore rupees because of the extension of the Anna Yojana, you know, the free food plan. And LPG subsidy is also higher than what the government budgeted. A CNBC TV18 poll again indicated that the government's fiscal deficit, therefore, could be higher by 1 trillion to 1.1 trillion rupees. Now, how will the government fund this extra deficit is one question. A second question rises with respect to states who are also flooded with more money. And here let me quote an ICRA view. ICRA has calculated that counting the devolution of money from the centre to the states plus the interest-free loans given plus own money, states can spend 7.4 trillion rupees on capex this year. But last year, they spent only 4.4 trillion rupees. This year, their budget is 5.8 trillion. So, can we expect a cut in borrowing from states since they seem to have more money than they can spend? Or should we expect that states could go on a higher spend spree? Can this boost the economy? To discuss all these, I have with me several experts: Pinaki Chakrabarti, the former director at the National Institute of Public Finance and Policy. I also have with me the chief economist from ICRA PD, A. Prasanna. I have Aditi Nayar from ICRA and Samiran Chakrabarti, the chief economist of Citi India. Gentlemen and Aditi, thank you very much for joining me. Samiran, let me start with you. The first question I have is actually the tax collection. It's absolutely robust and mind-boggling, but can it slow down precipitously in the second half, especially corporate taxes, because the second quarter earnings show a fairly serious dent in margins?
Thanks, Lata. And let me put the numbers out in front of you. So our sense is that while in the first half, the gross tax revenue growth has been 18%. In the second half, this growth can slow down to about 8%. But even with this 8% growth, the full year gross tax revenue would be about 2.8 lakh crores, higher than what the budget estimate has been. And you're right that bulk of this slowdown is going to come from the direct tax, where we are estimating the first half growth of 24% in direct tax will slow down to about 15% in the second half. And on indirect tax, we are assuming that the 12% growth in the first half will come down to almost a flattish number in the second half. And this is partly because of the growth slowdown that you are referring to, but partly also because we have to keep in mind that there is a significant base coming from last year. Last year, second half, the economic activity just picked up after the second wave. So with that higher base of tax revenue collection, this year's growth numbers will be relatively lower compared to the first half. Still, overall, from a tax revenue perspective, the collections will be much better than what has been budgeted.
Fine, much better. The average I got from your report, and I think you are expecting 1.1 trillion rupees more after deducting what the government is losing by of fuel cesses and other tax giveaways. So 1.1 trillion more. But in spite of sorry.
1.9 trillion on the tax revenue, and there is about a 800 billion loss in non-tax and divestment, etc.
Okay.
So the tax revenue is actually much better. 1.9 trillion is the net.
So
tax
net 1.1 trillion higher income for the government. Okay, that squares with what I got from the others. Aditi, what's your sense about the expenditure? Because it looks like, the Anna Yojana has been extended up until December. But there are state elections, and next year is also an election year. Are expenses likely to be even higher than what is currently estimated? Likewise, of course, chemicals prices and gas prices are not going down as sharply. So do you think there is a danger of overshoot on expenditure more than what you guys have budgeted?
Thanks, Lata. See, on the expenditure side, the really big ticket items are the ones that you've captured already in terms of the fuel subsidy, the fertilizer subsidy and the food subsidy. And I think when we get the supplementary demand for grants after the winter session starts, possibly there could be some amount of additional expenditure which may be requested for the NREGA scheme as well. But broadly, I would say 2.5 to 3 trillion over and above the budget estimates. That's the number that we're working with right now. Given the position of the wheat stocks and extension of the free food Yojana, the Anna Yojana into Q4 seems a little bit unlikely. Okay. And so that's not something that we're building into our estimates right now. And we have to keep in mind that every year there are some savings, and this is not necessarily something that is forced by the government. But at times, some departments or ministries may end up overestimating how much they can realistically spend in any given year, and they surrender that money at the end of the year. So it's not a forced cut in spending, but it's a saving which emerges because maybe the budgeting that had been done was somewhat overestimated. So this is something that we see in most years, that there are a number of departments that are able to come up with savings as well. And therefore, net, I broadly agree with the revenue numbers that Samaran put out. Mine are slightly higher than his. The overshoot in the fiscal deficit is something that we don't expect to cross 1 trillion in this year.
Okay. No, that's the point. 1.1 trillion, where will it come from? Prasanna, for the bond market, the big question will be, is there a danger of bigger borrowing from the market?
Yeah, so you've kind of explained the numbers, I think. So our numbers are broadly similar. So 1.2 trillion is the extra fiscal deficit we are expecting. Of course, as a percentage of GDP, it will still be 6.4%. So basically there are three sources, right, where money can come from. It can come from dated bonds, it can come from small savings, it can come from T-bills. And we have already seen news reports that the small savings collections are actually slowing down, which is not surprising because bank deposit rates are going up and small savings rates have been quite sticky. On T-bills, again, I think the cost of borrowing through T-bills has actually really gone up because of rate hikes by the MPC. So basically, the government can borrow 1 year T-bill at 6.8%. It can borrow a 30-year or a 40-year bond at 7.45%. So if I were the government, I would actually go and borrow dated today instead of borrowing through the short end. But somehow I think the market believes that there won't be too much of extra dated borrowing. And that is the reason I think the market is quite sanguine, because finance ministry officials have repeatedly assured that they have no intention of going for extra borrowing. But as you put out the numbers, yes, if you kind of work through bottom up the numbers, definitely there is a gap. They have to find ways of funding. And like I said, because small savings is lagging behind and even the T-bill cost has gone up, I think there is a good likelihood eventually when the budget is presented in the revised estimates, they might go for some extra borrowing, dated borrowing.
Okay, so that fear, that niggling fear remains. But Pinaki Chakraborty, in February, when we first heard that the government's fiscal deficit is as high as 16.5 lakh crore and the borrowing is something like, 12 lakh crore, the bond yields really shot up because we were all wondering who will eat so much of bonds. Are you surprised by the kind of response the bonds have got? Any idea? I mean, how come the banks and the financial system has been able to absorb this borrowing?
I think halfway into FY 22-23 fiscal situation of GOI seems stable, on a path to revenue recovery to a level higher than I anticipated in the beginning of the year. And given that fiscal deficit number, as mentioned by previous speakers, will be higher than what is budgeted, and still I think we have a reasonable kind of an absorption of the bond. Also shows the strength of the market, and banks are actually taking on these securities and investing in government bond. That's one. Second point I also wanted to highlight here is the issue that you mentioned about, whether in the second half we'll have a more fiscal gaps if we look at revenues and expenditure. I think the cyclicality of revenue growth and expenditure expansion during the second half always is higher than the first half, and that can create certain pressure on the bond, but more borrowing is going to happen. But I don't see it's creating a pressure apart from overall, as we see as we experience the higher interest rate, because we are trying to control inflation, etc. So I think things are stable, and going forward we'll have a lower fiscal deficit as a percentage of GDP. States also have been able to control their fiscal deficit to a great extent, and overall I think our fiscal numbers will be stable and will be on a path to a sustainable fiscal deficit by 25-26.
Okay, no, I wanted to just clear the mystery of this year's appetite. Any guesses, Prasanna? The money market dealers seem to speak about insurance companies and their forward rate agreements. Would that explain the surprise element in terms of appetite for bonds?
So that's definitely one part of it. So forward rate agreements, what you talk about, which means that the continuing demand for bonds from insurance companies. But in general, also, I think the size of these insurance sector, then if you look at provident and pension funds and NPS, for example, I think the sizes of these sectors have really grown. So I think in the past, we have been used to actually only banks dominating this market, or rather banks are the residual provider of demand for this bond market. I think that is no longer true. I think this insurance and provident fund, basically the long-term investors, they have really grown in size. And therefore, I think they are kind of setting the tone for the bond market. So essentially, they are taking out all the demand, all the supply, at the long end, and they're kind of capping yields. So, and that's why, like I mentioned, the curve is very flat, right? So market still expects overnight rate at 6.5. So your T-bill can actually go to 7%. But your long end is trading between 7.40 and 7.5. So it's an extremely flat curve, and a lot of it is because the huge appetite of insurers and provident and pension funds.
Okay, this could be a structural change. The higher tax collection, as well as the growth of entities or savings entities, which might be able to support a fiscal deficit. For the future, does that mean that we are going to reach more a comfortable fiscal situation, a comfortable tax to GDP ratio? That question after the break. Also, the situation of the states and their extremely comfortable position as far as revenue and expenditure. Those questions after the break. Welcome back. We've been discussing the extraordinarily comfortable state of the fisc, but possible problems in the second half if corporate taxes fall off, considering that we're seeing a dent in corporate margins. But otherwise, it's a positive fiscal situation that we've discussed so far. I've been speaking to Dr. Pinaki Chakraborty, A. Prasanna, Aditi Nayar, and Samiran Chakraborty. Gentlemen, Aditi, thank you very much for waiting on. Samiran, the way we ended was the health of the fisc and the larger number of entities who are now ready to buy bonds, especially insurance and pension funds. Some of them are hedging, booking forward. So I understand about 40,000 crore of demand for bonds has come simply from this forward agreements that insurance companies have entered into. But can we therefore assume that we have reached a more comfortable level of tax to GDP?
So there are two separate issues.
Yes.
Lata. One is the tax to GDP part, where we are now seeing that the tax to GDP has reverted to pre-COVID levels. Sometimes in certain kinds of taxes could be slightly better than pre-COVID also. And that's showing up in a higher tax buoyancy number. But the other question that you were posing essentially about the funding of the fiscal deficit and who are going to be buying these bonds, I think there the important point to take note of is that while we were discussing insurance, pension funds, etc., which are showing the fact that even this bond demand is price elastic. So if yields rise, then at some point of time, this product becomes more attractive and a natural demand comes from these real investors. And on the other hand, I think where we have to recalibrate our numbers is to think that the way we typically calculate the excess SLR for the banks, that might not be entirely the right way to look at it, given the need for banks to hold the high quality liquid assets to meet their LCR ratios. So effectively, the bank's mandatory holding of these bonds might be much higher than what the SLR ratios might suggest. Okay. And that might be creating a certain amount of, again, inherent demand for bonds, which is why, despite this huge supply of papers, the market yields have not moved up as much as people would have feared, resulting in the flatter yield curve that Prasanna was referring to.
Okay, no, I agree with you. There were two separate questions. The tax to GDP was separate and the funding of the deficit. But in both cases, we seem to have some slightly medium-term positive trends. Or is it only a one-off? Prasanna, that's what I was trying to get through to Samiran. Is it that this year we have a buoyancy in taxes, but next year as growth tapers, it will be difficult to maintain this kind of buoyancy? And it may also be difficult to give up on certain subsidies once it is entered into. So should we believe that there can be problems next year in the fiscal deficit?
Yeah, so I think there is definitely a cyclical component to this buoyancy in taxes. So obviously that will get hit as a business cycle slows down. So that will be especially, I think, visible in indirect taxes, especially the corporate taxes. But also, I think it is likely there is a structural component also. I think that is showing up in GST, for example, I think because of tightening of compliance. And probably, I think this drive towards formalization is also helping on the corporate tax side. So I think there are two elements here. We have to separate that. So definitely the slowdown will hurt going forward. There's no doubt about it. And I think that's a great point you made, that I think a lot of this buoyancy has helped support a lot of this rise in welfare and subsidy spending. And I think this was all partly because of pandemic, partly because of the war, global prices have gone up. But this is not a sustainable situation. So you cannot bet on this kind of tax buoyancy year after year and make these schemes permanent. So you have to start scaling back some of those schemes. Clearly on the subsidy side, I think on the fertilizer side and the oil side, hopefully as the global prices continue like this or even come down into next year, you can slow down that. On the welfare side, basically the free food grains program, which I think was discussed earlier. Again, there I think there is a need to taper that. So I mean, I understand that government might want to run this scheme for some more time, but maybe they can relook at the quantity of food grains being distributed. I think, like Aditi pointed out, there is an issue from the food stock position also.
Yes.
So there is a fiscal issue also. There is also supply of food grains. That is also an issue. So maybe taking that into account, you can start kind of reducing the amount of food grains you're supplying, and over a period of time, you can phase it out.
Okay. Yes. So, I mean, assuming the current rate of tax buoyancy could be an issue, but we will have to wait and see. The jury is perhaps still out. Aditi, you know, the states are in an extremely good position. I just got data, and much of it coming in from Prasanna, that this year the borrowing calendar from first quarter to third quarter for states was 6.5 trillion, but they've actually borrowed only 3.76 trillion. Is it that the states have much more elbow room to spend? Can we expect some kind of a stimulus to the economic growth? What's keeping the states from spending?
Sure, Lata. So our estimates are that the states have borrowed about 30% less than what they had indicated for the period up to November 15th. So from April 1 to November 15th, their actual borrowings are about 30% lower than what they had indicated through the RBI. And this is 5% lower than the same period of last year. Now, why are they borrowing less? I think there are some specific issues. Firstly, even they had underestimated their revenue buoyancy, the way that we're seeing for Government of India, that the actual tax growth is much higher than what was expected at the time of the budget. Another issue, then related issue, is that they're also already getting and likely to get far more tax devolution in the remainder of this fiscal year than what was budgeted for the full year. So as of now, the states have got 2 double tranches of tax devolution. So there's a monthly pattern of taxes being transferred from Government of India to the state government.
Yes.
And in August and in November, effectively the states have got double tranches.
Yes.
Already. Even after that, we believe they will be entitled to 3.8 trillion of tax devolution over the last 4 months of this fiscal year. So that's still a lot of money which is left to be transferred to the states. When money comes in unexpected and back-ended, our observation is that the states are not really able to channelize it very well towards capital expenditure. This happened last year as well, when tax devolution was particularly back-ended into Q4. And again, we are looking at a situation where maybe it's not as back-ended as last year, but there's still a lot of money to be received by the state governments in the last 4 months from pure tax devolution. Similarly, the CapEx loan scheme from Government of India, while the approvals have been quite good after August, the actual offtake under the scheme was very low up until September and has picked up to about 30,000 crore only at the end of October, is what we are understanding from the data which has been. We're hopeful that states will be able to undertake back-ended capex. There's a lot of fiscal space available for them to do that.
Exactly.
But actual spend was flat YOY in the first half of this year.
Okay.
So will they really be able to spend the space which is available? I'm not sure every state will be able to do that.
Okay. Well, Dr. Pinaki Chakrabarti, we are out of time, so the final comment really from you. How does one ensure that the states spend more? We have a fortunate situation where the center perhaps is just about hand to mouth, but states have a lot of elbow room. The Tamil Nadu finance minister was on record saying that instead of giving them extra money as an interest-free loan, it would have been better if he got it as a grant, because then it would be untied. Do you think that one way to stimulate the economy is to give money to the states untied? Is that perhaps the way out to kickstart the economy, or at least to accelerate it? You're on mute, I think. Dr. Chakrabarti, you're on mute. Oh, Dr. Chakrabarti, you are on mute. I don't think he can hear me. Okay, well, I think the connection has snapped. Well, that really is going to be the big question. Whether one way to move out of this economic growth situation. Yeah, go ahead, sir. Now we can hear you.
Yeah. Okay. The first issue with regard to borrowing, I think states' borrowing is going to pick up in the second half, and I hope they are able to spend up to 3% of GDP. And my expectation is that if they are able to spend up to 3% of GSDP, that would actually enhance capital spending. That is one. Second,
how do you make them spend?
The 1 lakh crore that was given was an untied grant, so untied borrowing. But there are a couple. Then there are detailed, guidelines were issued. About 80% of that untied money was given based on the devolution formula of the 15th Finance Commission. So 80,000 crore is untied. So there is a large part of it is part of this money is untied money. And one issue, that quality of capital, quality of expenditure. I think revenue deficit versus fiscal deficit will also have to be seen at the state level, for which we don't yet have a credible 23-24 data, but available evidence, monthly data shows that revenue expenditure has reduced. So my expectation is overall capex is going to go up in the year 22-23.
Okay.
Taking center and states together.
Okay. Well, what I meant by untied, or at least what the Tamil Nadu finance minister appears to have meant, is that Article 293 of the Constitution says that if you take a loan from the center, then all your subsequent borrowings from the market can be conditioned by the center. The center can impose conditions, and that is why he wanted the money as a grant and not as a loan. That's what I meant by tied. But in any case,
that's not the position, because that money, 1 lakh crore, which that was allocated in the
it's not
budget,
tied to a project.
80% of it was given based on devolution formula.
Yeah, I take your point. That definitely gave the southern states an advantage, but they wanted it as a grant and not as a loan. The separate issue is that states are not spending as much as the money they have, and maybe we have to look at ways to increase the state government's ability to spend, but that discussion is for another day. Thank you very much, Samiran, Prasanna, Aditi and Dr. Chakraborty.